Morning, morning, morning. Welcome, everyone. Nice to have you all here. It's bright and early for me. It's literally 6 a.m. in the morning here in Atlanta. I will start with a little story. Actually, before I go there, let me just get the slides up. So we are doing our weekly FAQ, and our whole idea here is not to give financial advice. It's just to share my opinions, my thoughts, my mistakes, and anything that I can teach you to help you with making better decisions for yourself. So, without further ado, how can I help? What questions would people like to know in terms of the process? And yeah, chuck them in the chat box. As I always say, I don't come prepared in this meeting. I literally come here to answer any questions that people have. I do want to start with a little story, though. I'm in Atlanta, and I don't know if you have or haven't seen, but the press has been going on about this terrible hurricane that's going to kill everyone, and we're all going to die, and it's going to be absolutely a nightmare. Well, if this is a hurricane, then I have no idea what. It's basically rained a little bit. There's been no wind. It's like unbelievable. Like everyone's been hunkering down for this tremendously terrible storm, and I think the Americans are pretty good at exaggeration because yeah, it's unbelievable actually. I mean, it rained quite hard, but I mean, we get hard rain all the time where I come from. So anyway, it is what it is. Anyway. So I've got a theme that I want to go through today, uh, which I'll talk a little bit to if no one has questions. But I wanted to see if anyone's got questions. You want to chuck them in the chat box in the meantime? Give my glasses here. Any questions? Any questions? Shane, we're going to need to like create a place in school where people can ask questions, so that at least we come prepared with some questions. Um, anyway,
Scott,
yeah,
can you hear me? It's Craig.
yeah.
I think what you just touched on in the American side is it's very similar here in the UK as well, where they deliberately over exaggerate these things so that you can't turn around and say you weren't given warning. With in a South African context, the infrastructure doesn't exist to give that kind of, I think, warning. So we kind of a lot hardier in terms of accepting what's coming. Where especially the UK, which is very much a nanny state, they love to take control in terms of holding your hand through whatever crisis you may go through. And I think that's maybe what you experienced there in the States on this typhoon that was about to kill millions.
Yeah, no, look, you're spot on, Craig. I think, I mean, I had dinner with Bruce Saunders last night too, and I'm going to show you guys. I mean, that's going to be my theme actually for today. And that's exactly what he said. Ever since New Orleans, where they weren't ready and there was massive disaster, now, like if there's a windstorm coming, everyone hunkers down, they close the schools, and yeah, I mean, look, if we've got time, I'm happy to talk to you about what I found on the ground in America as well, because that's a whole separate conversation. But I'm just opening up a PowerPoint here because of the theme of what arose last night with Bruce Saunders. Um, so what I'm about to share with you is probably the single biggest lesson that I've learned in property, in terms of what you need to know. So let me give it to you here. Some of you might have seen this before. So I was sitting with Bruce Saunders. Now, to put in perspective, I just want to be able to see everyone here. So to put in perspective, who is Bruce Saunders? Bruce Saunders is a guy who in 2000, so I started coming. So the story of America, I wanted to come, I'd been in America for the first time in 2000. Well, actually, I lie. I was here when I was 13 with my parents at Disney World. But anyway, for buying property, I in 2000 I came and I spent 5 weeks, sorry, 3 months traveling around America, and then I came back in 2010, but this time quite seriously to buy property, and I spent 5 weeks here, and I couldn't find anyone that I could trust. Funny enough, I got in a car in a place called Tampa, and they drove me. I had my wife with me. We left her in an Airbnb, and we drove. and I'm not lying, for 8 hours north of Tampa, like to go to this development. And then we looked at this development. They brought in this like American professional American football player. You know, for me, it'd be like bringing in Sia Khaleesi, but obviously I had no idea who the guy was. And then I drove all the way back. And I remember going home from America with my tail between my legs, just going, I can't trust anyone here. Like literally, these people would sell their sister just to make a deal. Like in 2010, that's how desperate they were. Anyway, we came back in 2012 with a different strategy, and it wasn't to try find property, it was to try find partners. And you're going to notice the whole theme of this is it's you don't invest in property, you invest in partners. When I came back in 2012, we flew from San Francisco right across on the West Coast, right across to New York on the East Coast, and we did 8 cities in 9 days, and we found partners. And long story short, one of those cities we really liked was Atlanta, which is where I am right at the moment. And there was a guy here called Bruce Saunders. Now, he was an ex-South African. He's a chartered accountant. He came over to do his articles in 99, and he's basically been in the property industry ever since. And we did our first medical buildings with him. So some of you might or might not have seen this building here. Sorry, as you know, when I do FAQ, I jump around. Um, where would it be? This building here we did with him. So it was him and a partner called Paul Shalander. And this building was a $16 million deal. And I'll never ever forget, it was a weird situation because we were sitting, we'd been, am I sharing my screen? No, are you seeing it?
You did bring it up for a second and then it dropped away.
No, there were. Um, we'd been trying to get into medical for a year, and kind of the philosophy at the time was find a building, go back to South Africa, find some investors, come back, try and buy it. But the market was quite hot at the time, and every time we kept missing it. So I'll never ever forget this moment. We were sitting in the boardroom. We decided this was a good deal. It was a $16 million deal. Bruce and Paul were putting in their own money. They were arranging the mortgage, which meant they were the sponsor. And it was a $16 million portfolio. There were 6 buildings we had to buy. And we'd been to all the buildings. And we got down to that moment where literally, Bruce was like, are you guys in or are you out? And my partner at the time, Henny, was like, yeah, well, we like it and we want to go back to South Africa and we'll go talk to the investors. And Bruce was like, no, you don't understand. We either in or we out. Like if we in, we need to admit it, like take it right now. If we out, for a problem. And it was basically we had to raise $6 million within 90 days from a standing start. Now $6 million today is a lot of money, but 10 years ago that was even more money. And anyway, long story short, we did it, and it was a huge success. I can show you the results of this, but we basically were expecting a targeted return of just over 8%, and people got about an 8.5% 4 or 5 years. We then rolled it up and sold it off to a fund. If you've watched me and I've taught you about the value chain of real estate, that's the best way to exit. And we got a total return of about 15% on average, which was above target. And the point of my story was that we did it once, and then we did medical 2, and then we did medical 3, and then we did medical, I think we missed 4. I don't know why. Maybe it didn't pass due diligence. And then we did medical 5, and then we did medical 7, and they were all with Bruce and Paul. And these two were really good. Bruce being the accountant, Paul being the property guy. They were super conservative. And I actually sat and I had dinner last night with Bruce, and I said, I blame you. And he said, what are you blaming me for? Because we proceeded to go on and lose tens of millions of dollars. And why I said I blame him was because when we met him for the first time, it all sounded, it all worked so well, and it sounded too good to be true that people got complacent. And the guys that I was working with at the time basically, formed this investment committee. There were 12 people in the investment committee, a mixture of chartered accountants and MBAs and all these clever people. They were costing about $30,000 a month. You heard me right, $30,000 a month. That's R500,000. And again, I'm talking 10 years ago, doing all this due diligence. And we put a lot of their success down to kind of all of these buildings. But as it turned out, it had nothing to do with all the clever CAs and MBAs sitting in their um, sitting in their their office in Pretoria, it actually had to come down to the partner, because what I'm about to share with you is probably the greatest lesson that I've learned. So that was a huge, huge success story. Um, but then we go on to failures. And you often in life learn more from failures than you learn from your successes. But let's go to this building. So in 2016, there was an opportunity in Australia, and we were buying a piece of land with a developer, and he was going to build 50 odd units. I can't remember exactly. I think it was 50 units. And we were basically going to sell it. Now, I mean, anyone that's ever been involved in development, you basically buy the land, you get the zoning, you do the pre-sales. Once you got the pre-sales, you then get construction finance, you build it, you sell it, you make lots of money, and you celebrate. That's the fairy tale story. Well, what happened here is we bought the land, we had the pre-sales with a partner on the ground, and he had the pre-sales in Hong Kong. But then the Chinese government, I can't remember the years exactly, but 2017 probably, the Chinese government changed the rules on people in China being able to move money out of China. And all the pre-sales were to people in Hong Kong. So he lost all the pre-sales. And then it wasn't just Chinese people, so the banks in Australia stopped lending to any foreigners, South Africans, Americans, Chinese people, anyone. So then you couldn't get mortgages for foreigners. So now we'd lost the pre-sales and you couldn't get mortgages for foreigners. And then the construction finance was pulled. And the problem was we were 4 stories in the ground. We'd already spent like $5 million in the ground. If you've ever done a development, we were 4 stories down, all the piling was in, everything. You fast forward this building 8 years later, that investment committee, all those clever CAs and MBAs and whatever, they've all run away. And there's me and 82 investors that are stuck. I've got $400,000 in this deal, to put in perspective. And I must actually find the picture. It's a big bloody hole in the ground. And the developers run away. So again, back to the quality of the partner on the ground. And now we just got a big bloody hole in the ground, miles and miles away, that we're trying to manage and develop. Another story is, I mean, that's what it was supposed to look like, but I was actually ashamed. If you just make a note for me so I don't forget, I should have this nice picture of what it's supposed to look like, and then I should have a picture of that hole, a big bloody hole in the ground. Um, but then the second story was, and why I started with Bruce and where this whole kind of train of thought went, was having dinner with him last night, was that after Bruce and Paul and the company SG Properties and the success, these guys then went on, this investment committee then went on to find a group called Richmond Honan, and we did multiple deals with them and amazing buildings. I mean, I don't know about you, but I never thought that I'd be able to invest in a building that looked like this. I mean, it's pretty incredible. The problem is that this guy's been defraudulent, and during COVID, he was collecting all the rents but not paying the bank. And the partners on the ground didn't actually do their due diligence properly. And the banks have foreclosed on a number of these buildings. And again, like we've got all the control, but we've actually lost these buildings and they've been trying to recover them, etc. So what's the lesson in all of this? And what I'm about to share with you is probably the most important lesson that I've learned when it comes to partnership and when it comes to property and real estate. So the first old school way of doing stuff is control, and the new age way is diversification and partnership. So if you take a building and you borrow generally about 60% from the bank, you'll get about 30% in private equity and about 10% in equity. And on the left-hand side, because you want all the control, you want to put in 95% of the cash from the investors. So that's how you sit. On the right-hand side, it's exactly the same equation, bank, private equity, and equity. The difference is that you only want to put a small amount in. So you put 10% in. So you don't have all the control, but you only put in about 10% of the money. On the left-hand side, you've got more risk. On the right-hand side, you've got less risk. On the left-hand side, you've got concentration. So, if you've got $10 million, you've put all your $10 million into one building. You've got control. So like, yay, because it's an old school mindset. Oh, I must have all the control. Well done. You've got all the control. But if something goes wrong, you have to fix it. And I've given you two examples. One is this hole in the ground in Australia, and the other one is these buildings in America where the partner has done something fraudulent. And the international investors are now trying to fix it. And you've got all the control, great, but you actually have to do everything yourself. Just 2 seconds quickly.
Beautiful day, eh?
Yeah, okay. I was just running a webinar.
Did you, oh, I'm sorry,
Yeah.
did you, ask for the extra day?
Yeah, no, I've already spoken to a lady. I'm going to stay right till next Friday.
Okay, so,
I need to sort
oh,
it
you're
out.
not staying here?
No, I'm staying. Yeah,
Oh,
no,
you are? So she's good, because I don't see that it's blocked, and she called me, did she talk to you?
She said it was. She said it was. Yeah, because I spoke to her yesterday. Literally on Airbnb.
Okay, let me just make sure. It doesn't look like it is though.
I know. She said to me, "I've got to click on it," but she said she blocked it out for me. I'm literally.
Okay.
I've got to sort it out. I was going for dinner last night.
I'll block it out. If
Please
you want
do,
me to,
please,
you want to
yeah.
just pay me cash?
Whatever's easiest for you.
Okay.
Yeah.
And what, Friday and Saturday?
No, I fly next Friday basically. So it's the 4th.
Not this coming, all the
Yeah,
way,
yeah, yeah.
oh, wow,
Yeah.
okay,
Okay.
to the 4th.
She said
So if you
she.
check out the 4th.
Yeah.
I'll tell you what, let me call her, I'll call her and I'll try to get her.
Cool. You're a star, man. Thanks, man.
We don't have your number, that's why we can't call you.
Um,
We don't have your local number. It
I
won't let us
don't. I don't have a local number. That's why I use WhatsApp.
use WhatsApp.
Yeah.
Okay, and what do I do? Just put your number in WhatsApp or is there an extra?
Just 2 seconds, dude.
Can I give you my number and you just text it to me?
Yeah. No worries.
Alright. 770
770
231
231. Yeah.
5819.
Yeah. 19.
Okay, cool, man.
You're a star. Oh, cheers. Literally right in the middle of the lesson. Okay, so on the right hand side, you've got diversification. You got less control. So the logic is, okay, well, I don't have all the control, but if stuff goes wrong, you've got local investors. So if you're an international investor and you've got a hole in the ground, it's a major bloody problem. But if we had Australian investors there, then they would help solve this problem. So on the left-hand side, you got all the control, but you have to be active. On the right-hand side, you have less control, but you can be an armchair investor. On the left-hand side, it's all about scarcity. And on the right-hand side, it's all about abundance. And to give you an example of what I'm talking about here, because I was literally going through this with Bruce last night, was if you take a deal that we did just before Christmas, which was in Manhattan, it explains this perfectly. So if you go through here, so we did this deal in Manhattan. And what was really interesting, I mean, look where this was in Manhattan. I don't know if you ever thought you'd buy a building here in Manhattan. It was this church that was, not being used, and it's being renovated, funny enough, into about 50 units. And you can see the pictures here of what it'll look like, once it's done. Anyway, and it was an 11.5% return. What's important here, though, is it was a $14 million deal. There was $8 million being raised. We raised $500,000. Our family office that we work with raised $1.5 million. So there was effectively $2 million of international cash, and $6 million came from high net worth or institutional investors in America. Now, if things go wrong, can we agree that we've got less control, but that the local investors are going to have a hell of a lot more to say in terms of actually investing and helping fix that deal than a bunch of foreigners that are trying to do it all themselves? Does this make sense? And why I share this with you is because literally last night with Bruce, and I come back to how I started the story, I joked with him and I said, Bruce, the problem with you is that the failure is all your fault. Because when we got it so right with you, we thought we were the clever ones. And again, I thought our investment committee at the time was the clever ones, etc. But what I realized was that they weren't. And that no, in my opinion, because again, we had all the pedigree. We had wealthy people that were successful in South Africa at property. We had CAs, we had MBAs, we had everything. We had lawyers. but they have no idea how to be successful in a foreign country. I can see Stuart saying, I know Stuart knows what I'm talking about. You're only as good as the caliber of your partners on the ground. And the simplest question that I could say to you in terms of finding the right partners, there's three things that we look for when we have a partner. One, have you done this for more than 10 years? Because everyone looks clever. So a couple of funny sayings here, again, that you always learn in every crash. Any turkey can fly in a hurricane. I don't know if you've ever heard that before, but any turkey can fly in a hurricane. Two, when the tide goes out, you see who's got their pants down. So again, when the market's rising, it's easy to make money. But the moment the market turns, like it has in America for the last 2 years and all over the world with the rising interest rates, that's when you find out who the real players are. So the first thing is, have you been around for 10 years, yes or no? Because that'll determine whether they've been through a cycle. The second thing is, have you got a niche? Like in Paul and Bruce's case, they specialize in medical. That's what they've done. His father did it. That's all he's done is medical. And the third one is, have you put money in? So in those first couple of deals with Bruce and them, although we raised $6 million, they put in $500,000, okay, themselves. Now, 500,000 of 6 million is not a high percentage, but as a proportion, it was higher than almost any investor themselves put in. Does that make sense? And so they were more tied to the ship than anyone else. Whereas, as it turns out, that developer in Australia and Richmond Honan, they supposedly put stuff in, but it looks more like it was sweat equity and whatever than actual physical cash. And so those three things are so important. Have you been in business for more than 10 years? Are you niche focused? And are you putting your own money in? And back to Bruce last night, we were talking about it, and he was like, hey, do you want to do more deals? I said, of course I want to do more deals. I'll always do deals with you because I trust you. But for me, I wouldn't break that principle. And the best case scenario for me would be not just to do a deal with you, but actually to do what we did in Manhattan, where we partner with local investors. Because, we had an opportunity in England come up this year, a couple of months ago, about 3 months ago. And it looked an amazing opportunity. And I've known this guy for a while, and he got hold of me and he said, hey, do you want to do this opportunity in London? And I said, yeah, it looks really good. I said, how much capital are you looking to raise? And he was like, £4 million. I said, okay, that's wonderful. So tell me, how much money are you raising from England? And he was like, no, you're going to raise it all. I was like, no, well, we're not interested. Like the moment I hear that, I'm literally like, I'm out of here. Like, because if you can't raise money from local investors, then there's a problem that we need to know about. So just by the way, is this valuable to you? I mean, I know I teach this stuff on the investor roadmap and I know I bring it up, but I mean, the lesson I've just shared with you is probably the single biggest and hardest lesson I've learned in property. I've probably lost about, between myself and our investors, about $20 million in learnings, like with this process. Bibby said, hi Scott, I met you many years ago at the Hun Australia weekend at Shumba's. I bought the samosas. Brilliant. Awesome. Was that when we were doing what was it called? The WCU, the Wealth Creators University. I assume that's what it was.
So you're probably doing a fire walk as well.
Probably. It's actually funny you mentioned that, Bibi. I did a screenshot of Brendan last night, and the name of him in my phone is Brendan WCU, as in I met him there. And I think, Shane, you and I met there as well, if I remember rightly. So we have to thank Hannes. If it wasn't for Hannes, Shane and I wouldn't know each other. And if Shane and I didn't know each other, none of you would be here. Okay, so now what I want to do is I want to pivot that, and I want to show you how we've shifted. Just for the record, though, if you disagree with what I've just shared here, so it's funny Hannes comes up because on the presentation I did, sorry, I can't even remember now if it was this week or last week, and someone was like, but then you disagree with Hannes. I agree with Hannes on many things. I really like Hannes. I mean, in 2002, when he taught me that income is more important than capital growth, I think it's one of the most important principles I've ever learned. But there's one thing that I don't agree with Hannes on, and that's that he is all about control. So his philosophy is you must control everything. And I don't agree with that at all. I don't believe that you can diversify around the world, and I don't believe you can do it all on your own. I actually don't care if you've got $100 million. The chances of coming to America, finding the right city, finding the right assets, trying to do it all yourself, then going to England, doing the same thing, then going to Germany, doing the same, it's impossible. It is literally physically impossible, even if you've got $100 million. And that's where him and I tend to disagree. And so when you want all the control, and you live in Pretoria, then you need to do all your deals in Pretoria, which means you're not diversified and you've got all your eggs in one basket. So we've got a fundamental lack of alignment in that space. I'm not saying one's right and one's wrong. They're just two different principles. And why I bring up the principles is that if you don't agree with this part on the right in green, then we're not the people to help you. Because back to Bruce last night, he was like, "Hey, do you want to do a deal where you raise all the money and blah blah blah?" I was like, "Nope. I'm only interested in doing deals like the right-hand side. I don't want all the control. I want less risk, and I want local investors, like simple black and white." And I always say to people, if that's not aligned with the way you want to do it, then perfect. But then we're not the right place. You can't help everyone in the world. So there's 4 deals on the platform right now, and I want to talk to all 4 of these deals in relation to the principle I just taught you. So the first one is a private equity deal in London. They're raising between £1 and £1.5 million. We basically will put in no more than about £300,000. Okay, so you'll notice the principle here. Oh, and by the way, even last night, Bruce said to me, "How do you get around the KYC, KYB, which is know your client, know your business?" And I said, "No, well, we never take more than a 25% stake." So the way the banks work is if someone owns more than 25%, then they've got to know who the key individual is, the person, there's a special name for it, but it's basically the primary owner. And this sums up exactly what I'm talking about. So in CarryFit, it's a private equity opportunity. It's basically a baby carrier operation. So what that means is you can see it here. So when mothers effectively have got newborns, so sort of up till the age of 2.5, they use these CarryFits, and it's also got an app. So it's been a highly successful business. It's quite a young business. It's not even 2 years old. It's got quite extensive expansion already through England, and it's looking to go into Europe. And they're growing sort of month on month. And they need capital. It's called growth capital because they've got more demand than there is supply. So it's always nice in business when there's more demand than you can from a supplier's perspective. So with our partners, Calio Private Equity, they've gone in, they've done the due diligence. They spent about 6 months doing due diligence on this company, and they've agreed to do this funding. So the returns are really, it's quite aggressive and quite exciting. The target return here, you're looking at about 25% plus internal rate of return. It's a 5 to 7 year investment. And so you're looking to kind of 3x your money, like 3 times your money at a minimum. There is a small income return of 4.5%, which is due to be paid out annually in terms of that process. So, when you look at this deal from a principal perspective, and by the way, you can go and read all about it. You can go and see like it's a private equity deal. The sponsor is established. The risk is opportunistic. So why it's opportunistic is because it's private equity. It's growth capital. You can go read all about it. You can download the document. You can look at all the risks. You can read about the market and the sponsor and absolutely everything. But what's important here, and you can even watch the webinar with the partners on the ground. But why this is important is that, as I said to you, they're raising $1 to $1.5 million. We'll only do about $300,000. So we're partnering with other family offices and institutional capital to get into this deal. Are you starting to notice the dots of like the same principle? Like, can you see here, if I go back to this, we're only putting in about 20% of the capital. So we've got a lot less risk in the overall process. Sure, we don't have all the control, but we've got local investors, and it's kind of this armchair approach. Could you just give me a thumbs up or something so that I know that people are understanding this? Otherwise, I feel like I'm rambling away to myself in terms of the process. Is this making sense? Okay, let's go to the next deal. So this is Austin Business Finance. This is a debt opportunity. So this is where they fund businesses in America. And these businesses, they're basically targeting the small to medium enterprise businesses in America. They get about, it's something ridiculous, like 8,000 applications a month, and they only fund about 50 businesses a month. They raised about $20 million in their own private financing, and then they've managed to secure a line of another $100 million from institutional capital. Of that $20 million, 12 million was equity and 8 million was debt. And so again, this is a big animal, in comparison. And we will raise in tranches of about $500,000. So again, if you take the principle here, you're raising the capital, you're providing debt, you're getting a return of about 9% in terms of an income return. There is no capital growth, but it's a steady 9% kind of payment. You can see that the deal is alternative, the sponsor is developed, and the risk, again, because it's a debt opportunity, is opportunistic. You can watch the webinar, but again, if you look and you can read all about it in terms of this process. But if you come back to this principle here, again, we're putting in a very small portion of the capital in terms of the larger pie. And by the way, this company performed right through COVID, which was a very good sign. They paid their distributions right through COVID, which is, considering what happened to small to medium enterprise businesses all through COVID, it's a very, very positive sign. But again, if we've got $500,000 in a capital stack of $100 million, where you've got massive institutional capital, some from very respected companies, can we see that that's probably quite a good thing? Like where we're a little suckerfish on a big whale. So that's a debt opportunity in Austin, Texas. Then you go to Phoenix, Arizona, and this is an industrial building. So I must admit, I never thought in my lifetime, certainly when I was running around doing kind of real estate riches, that I would be buying industrial buildings like this. Industrial logistics buildings right in the heart of Phoenix. And again, this is an industrial building. It's a 5-year investment. It's got about a 6% cash on cash return and a total return of about 16%. It's an industrial deal. The sponsor is emerging and the risk is core plus. And again, you can go and watch all the videos if you want to, and you can see all the pictures in terms of the building. But you can see there from a risk perspective, it's a core plus deal. You can go read all the documentation. But again, what's interesting on this deal is that firstly, we already own this building. So when I say we, the partner on the ground already owns this building. And there was a group, funny enough, out of South Africa that promised to put down $500,000 into this deal. So it closed in the middle of last year. So myself and a number of our mastermind members privately participated in this deal. And anyway, there was this $500,000 allocation to this deal. The total deal is about a $10 million deal. And the South African firm let this guy down, let the sponsor down quite badly, because they said they were good for 500, and then when it came to closing, they didn't have the money. And so he had to put his own personal cash in to close the deal. And so about a year later, the South African firm hadn't delivered what they promised. And so he came to us and he said, "Hey, do you want to participate in this?" And we said, we'd love to. I mean, we've done about 3 deals with the guy. We'd already invested in this deal. It was paying monthly. It was brilliant. And so, for me, again, the majority of the capital, I told you already, there's $10 million in the deal. And, we're in for 500,000. Are you noticing again the pattern? I know I'm belaboring a point here, but I'm trying to show you how important this is in terms of the overall process. So that's a really good deal. I've invested in all of these deals, but I really like industrial, and these guys pay monthly as well, which is awesome, in terms of being able to get returns. And then finally, the German deal, and this is a deal that is not even available, same as the Manhattan deal. It's not even available. You can't even get it on the open market. Like, unless you're part of a family office or institutional capital, you don't even know about these deals. So again, you can go and watch the webinars here on the, about the deal. You can go see the pictures and the properties and where they are. But in simple terms, this is a mixed use deal. And I mean, it's nothing, it doesn't look fancy, but it's a mixed use deal. And the returns are about 7% in euros. It's a 5-year investment, a total return per year of 16%. This company, Encore, Peter Katz has been doing this now for 14 years in Germany. He actually headed up Redefine, which is one of the biggest property funds in their European division, and he went on his own about 6 years ago. And what I love about it is, again, that's all he's done for 14 years is European deals and specifically German deals. He puts his own money in. He puts in 10% of all the cash he puts in himself. And, he's niche focused. He does mixed use buildings. And what's really interesting in this opportunity, again, is that it's a big building. The total raise is many, many millions of dollars. And it's all coming from family offices and institutional capital. And we come along, and again, we'll take a portion here of about $500,000, and we get to be a sucker fish on a big whale, because I've been trying to invest in Germany for 20 years. I've unsuccessfully been able to do it. But with our partnership with Callio Private Equity, which is a family office, we finally got invited to the table and have the opportunity to participate investing in this deal. So once again, it's a deal. It's a core plus. You can go read all about it. You've got all the project calculators. You can literally go through and see all the returns, etc. In terms of this deal. But what's so exciting to me is that all four of them you can see tick this box. Does that make sense? And if I now go and I say, okay, but I want to be an investor, Scott, you've been talking about diversification. So let's just go here. And I literally did a demo yesterday. So I need to delete my investments quickly. Let me show you how easy that is as well. I'm basically refunding my wallet. Now I know that my partner Alex and Shane yesterday did a demo, and every Thursday we sort of demoing the platform and how to do KYC and everything else. So, I can show people if they're interested. But say, for example, okay, I like a bit of private equity in England, a nice, good solid target return. I say, yep, nope, that's definitely something I want. So I go invest in this deal from $10. I go continue. I go agree. I download the document if I want to. I go agree, and I go make investment. And boom, I've just made an investment into England. Now I say, okay, right, I want a bit of Austin finance. I want to do a bit of debt and, because it's an income producing deal. I'll tell you what, I'll go and I go agree. And I go, I agree, and I go make investment. So I've now diversified, and I've got private equity in England. I've got debt in America. And now I go and I say, okay, cool. What about a bit of industrial property? And I go basically make this investment. And I go agree. And I go make investment. So now I've got a bit of industrial property in Phoenix. And, and then I go look at my portfolio now. And there I am. I've literally diversified across all three markets. And then, I literally sit and I go, every principle that I try and teach people when it comes to diversification, I've just shown you. Because what have we achieved there? We've diversified and we've invested in different countries. We've diversified and invested in different currencies. We've invested with different partners. So each one of those is a different partner. They're different asset classes, and they're across different time. And this is the point where, I was actually joking with Paul Mahoney about it and John Lee. It was actually John Lee, sorry, if you were at the weekend, the Real Success Summit weekend, where John Lee said, it's at that moment when you share it with people that everyone should jump to their feet and scream and shout. And he was like, the South Africans looked so confused. And I think the reason I get so excited is because I don't think people know what I've just shown them. 10 years ago, if Craig wanted to invest in America, I would fly him to America. I would take him to see an accountant. I would open a company that cost $2,000. I'd then drive to the bank. We'd open a bank account. That took an entire day. You literally sat in Wells Fargo for an entire day waiting to open a bank account. Then we'd get in a bus and we'd drive out to go and look at properties for a week. And we'd drive and we'd look at about 20 properties a day for a week in multiple cities. And then Craig would find, Craig, I'm just picking on you. And then we'd find a house that Craig would buy that he likes. We would then negotiate with the seller. He would buy the house. We would then introduce him to the management agent. The management agent would have to manage the property. Every 3 months, something would go wrong. The bloody kitchen would burn down, or the boiler would be stolen, or the tenant wouldn't pay, or something. But anyway, like some of it would work, and the rent would get paid into this LLC. Then every year, the accountant would have to redo the structure and submit all the paperwork for $2,000. So even though the property actually supposedly was performing, the net return was not like great. Plus, you had all the hassle, of running this. And that's all gone away. I literally showed you how to do that in like 30 seconds. And that's why I get so excited, because I know, having done this 2,500 times, what it takes to do it the old way versus doing it the new way. But then on top of that, the other thing that I get excited about, and just using that same example with Craig, is that Craig and I were out there buying mom and pop houses. We were buying what retail investors do. We were buying what middle class people do. We weren't investing where the top 1% invest. Like, we were literally driving around the streets of Atlanta buying mom and pop houses. And I don't know how to reiterate this over and over again, but we've all been indoctrinated to go buy houses as middle class and professional investors, but we are basically mom and pop investors. We are retail and we are mom and pop. And I'm sorry to be direct and horrible, but it's the truth. If you look at all four of those opportunities I shared with you that you can invest in right now, all of them are at an institutional level. And most of us wouldn't even known about them, let alone being invited to the table 10 years ago. And the only reason we're invited now, I mean, even on that German deal, you need 250,000 euros if you want to participate in your private capacity. But because of technology, we can bring us all together. And when we invest with $500,000, they take us seriously. Does the mindset make sense? So, yeah, I don't know. I just keep going on and on about it. Like, I have my own little party because no one else seems to care in terms of the process. Anyway, BB asked, how do I enroll in the course that you had on the weekend? BB, I'm happy to help you. I'll put well, either myself or Shane, in terms of the process. What we basically spoke about on the weekend was the wealth hackers. So just to give you an example here, I actually showed people. Just give me 2 seconds. So what is this all about? So here it is. Well, actually, let me start here. So we basically have always been a community company. What I'm doing right now is all I know. So this was me in 2004. I was in London. That's me there standing on.
Scott,
Yeah.
Scott, you're not sharing.
Oh, okay. Thanks, Shane. I was sharing on my side. Anyway, what I was saying, so this was me in 2004. That's me there. There were about 120 people in the room, and I basically taught them how to buy property in England and in South Africa. I was 25 years old, but I'd already been doing it for a number of years. That's Chaz Everett. If you know the brand, Chaz Everett in South Africa, he was my speaker, giving people boerewors rolls on the Thames. This was Baldwin, the biggest residential developer in South Africa now, a listed company. We were doing their launches. That's Ian Fife. He was editor of the property section of the Financial Mail. Andy McPherson, that was the CEO or managing partner of Buchanan Boys, the biggest conveyancer in the country. And you can kind of see, there's Doc Down Australia, actually, if people want to know. This was when we were doing it in London. You can basically see, investing in England, investing in Australia. That then led to these buyers trips that I'm talking about, where you went over and opened bank accounts and, bought houses and, met the partners on the ground. And we did wealth weekends where we went away for the weekend with our investors. We just done, 2 this year. We did one in March in Cape Town, and we did another one in August up in the cradle of humankind. Why do I say all that? Well, communities in our DNA. And so Wealth Hackers, which is the shirt I'm wearing, is what Shane and myself effectively launched. And what is it all about? It's effectively the Netflix for wealth. And why we say that is that over the years, we built out all these courses. So Wealth Going Global is a six module course. It'll literally help you with each step of the process. So you get very clear on your why. What are the top 5 reasons that you want to invest? What are the top 5 countries that you want to invest in? What are the top 5 currencies that you want to invest in? What are the top 15 assets that you want to invest in? How do you find the right partners and avoid the mistakes of 80% of people? How do you build a wealth plan over time? You're here, you want to get to there in 5 or 10 years. How do you do that? And then finally, there's a bonus module with smart investing and how to use technology. So that's the first thing. People, a lot of people have paid $497 for that. The value is over $8,000. Then on the other side of the fence, so that's the right information. On the other side of the fence, you've got to have the right partners. And that's where over the last 18 months, we've been interviewing partners in all of the top 15 asset classes. So, whether it's multifamily, industrial logistics, medical office, co-living, ETF, senior living, retail, first mortgage debt, London residential, structured notes, gold and silver, private equity, venture capital, crypto, etc. We've got it all. And we've literally gone, because this is not going to a Harvard professor to teach people about how to learn about this stuff. It's actually introducing people to partners that are actually doing it and investing. So that's over nearly $15,000 of value. It retailed at $1,997. And what we decided with Wealth Hackers was to literally copy Netflix, to put it all into the university. And although a lot of people have paid $2,494 for this as a once-off payment, we decided to turn it into a monthly subscription. So our pre-launch was $29. And for $29, you get access to both the courses. Plus, you're going to get access to the stuff we did from the weekend, generational wealth. We've got a guy called Peter Katz that came out and taught everyone about generational wealth. We've got Enneagram and Wealth, which is, a profiling system to help you know how to make far better decisions for your investment. And you literally get all of that for $29 a month. And you can take as long as you want. And just by the way, if you divide $2,500 by 29, it'll for 7 years, you can be doing our courses, and it'll cost you less than actually, paying for these courses up front. So we're a big believer in democratization, and our philosophy is rather do it on a monthly basis so people can, be doing it, and as new courses come along, etc. And then, I also will be doing these Q&As, and where I bring in people like Clem Santa. We'll have the VIP room. We've got the community-based learning, which is me turning up every Friday from an FAQ perspective. And if you don't like it, there's a money-back guarantee for 30 days. So, BB, I don't know if that answers your question in terms of where it is. Shane can share the link for you. It is important that we use the link. Well, in BB's case, we must use the link for the Real Success link. But it just gives you an idea. Our whole philosophy, I've been on stage for 20 years. I've been investing for 28 years, but I've been teaching people how to do it for 20 years. And we've always tried to do two things. On the one hand, we want to teach people and show them how to do it. And on the other hand, we want to provide a solution. I don't really understand the point of people just learning and not doing. But I also don't understand the point of people investing without knowing what they're doing. So for me, you've got to have both. You've got to be able to learn and get the knowledge. And two, you've got to have the solution to be able to invest. So we've got the university, Wealth University, to learn and get the knowledge and meet the right partners and all that. And then we've got Wealth Migrate, which is the investment platform to invest. Thomas said, brilliant, even much easier than crypto, inventing crypto. Thomas, I know you meant investing, but we're not inventing crypto. But anyway, it's all good. Craig said, since investing in Wealth Migrate platform is the ultimate goal of all of this, is there a way to include investment on the platform in the affiliate angle? Yes, Craig. So literally Shane and Mersha are working on that at the moment. I mean, we do have some big affiliates already, like Real Success, like Ann Wilson. So they actually are. Shane could probably explain it more, but at the moment it's a little bit more of a manual process where we've got to program it. But it is very much what we basically say to people from an affiliate perspective is use First Promoter. So let me just share with you what that is. Where's it gone now? There we are. So I mean, use this digital platform, and Shane, maybe if you can just chuck in the link again for people. And if you use our affiliate system on the education side, then we can just manually track it across on the investment side. At the moment, that's the way we're doing it. Thanks, Shane, for putting in the affiliate link. I'll just bring it up here so everyone can see what Shane has just shared. So yeah, it's basically a link here. You can become an affiliate. It's free. You sign up, and I mean, I showed you the back end system, how it all works, but this is the front end system. So it's all trackable. And to Craig's point, once it's in the system and trackable, then it's easy. And what we're doing on the back end is we're integrating that into the investment platform. Okay, Phil said, sorry, hang on. There's one other link that I just want to say before we do Phil's. So this was the wealth hackers that Shane, the link that Shane's shared. So you can see you can go into it. You can watch the video. You can see what it's all about. You can see the value chain. So, you've got wealth going global and asset mastery, right information, right partners. The intention is to get you up to the mastermind. Hang on. You've got the, wealth going global, what it's all about. You've got asset mastery and what it's all about. And then basically it's reliving the whole digital community. So it's a group of like-minded people to create results. And if you like it, I know I can't do it because I'm already logged in, but you would just click on it here and you would sign up in terms of it. And it's pretty cool. I mean, you basically got the community, you got the classroom with all the different courses, you've got the calendar with, when different events are happening. You've got all the different members that you can connect with. You've got the leaderboards. So this is a whole gamification thing that we're building. And then finally, you've got the about in terms of that process. Okay, so let's go to Phil's question. And Phil said, can you please elaborate on the investment return metric? I see cash on cash return of just below 7%. Is this not low given where the current interest rates are? So Phil, it depends what you're talking about. Remember, and again, I'm assuming that you're talking about interest rates in South Africa. Again, tell me if I'm wrong. But remember that interest rates in America are sitting. So let's just go and share it. So what we'll do is we're just going to go to an industrial building. So let's go to this one here. Okay, so your total return. So what's quite important here is that you've got two returns here. You've got a cash on cash return and you've got an internal rate of return. So these are two of the most important metrics in the game. And just by the way, Shane, I know we've said this a couple of times, but if we put the video where I've explained cash on cash and IRR into the wealth hackers, into the community. I don't know if we have, I can't remember.
I think so, but I'll go find it.
Yeah, if you wouldn't mind, because I just think it'd be really valuable for Phil. But in simple terms, Phil, this is a net return. So this is cash in your pocket. It's not a yield. So if I put $100 down, I'm getting paid, net in my pocket, $6.16 a year in income. But I'm also getting the capital growth. So the total return I'm getting for the year is 16%. Now, if we take interest rates in America, they were sitting at around 5%, and they've just dropped by 50 basis points. So they're at about 4.5% right now. So you're actually getting a higher than average cash on cash than you're getting an interest rate, and you're getting the growth component. One of the reasons the cash on cash is slightly lower, because we've traditionally been north of 7%, sometimes even north of 8%, is because interest rates went up. When interest rates were low, when they were sitting at 1%, 2%, and 3%, we were getting better cash on cash returns because the cost of capital, the amount of money to pay for a mortgage was less. But because in the last year or two, interest rates have gone up, it's affected the cash on cash. As the interest rates come down, the cash on cash will go up. Although in most cases, our partners have actually fixed the rate to ensure that we didn't have any sort of risk from an interest rate. I want to show you an example of what I'm talking about. So we all invested. I invested in this, but so did a number of our partners. I mean, I never thought I would own a building like this. I don't know about you, but I never thought that this would be my property. And I bought this in, you can see here at the end of COVID, December 2020. This is paying 9.82% cash on cash. So in a low interest rate environment, they fixed the interest rates, and right through the last couple of years, it's an office building as well. So even though people say office doesn't work, well, it does, because there's 9.82%, and I can actually show you here. Oop, no, that's not the one I want to show you. Let me just I'll go into the back end system here. So I mean, here's that building literally paying out every quarter, the distributions basically. So yeah, I don't know, Phil, if that answers your question. In a rising interest rate environment, the most important thing is to fix the interest rates. But this maths, and by the way, brilliant question that Phil's asked. You've got to know, like, these two metrics. They're literally the two most important metrics when it comes to investing. What is cash on cash and what is IRR? Internal rate of return it has 27 different variables. By the way, I learned this from Dr. Hunt Australia. It's got 27 different variables, and it takes into account everything that you need to know when it comes to investing. And it allows you to compare property with gold, with private equity, with structured notes, with the stock market. It basically allows you to compare apples with oranges, with bananas, because it gives you a total return per year, taking into account inflation and time value of money and everything else. So IRR is singularly the most important calculation you need to know. And then cash on cash, which is the income in your pocket. I mean, ultimately, you're going to retire based on passive income. The cash on cash number is the one that is critically important. So thank you, Phil. Thank you for a brilliant question. Those are the sort of questions I enjoy, Phil, because it allows me to share with others. So I really appreciate it. Craig said, do you have a working spreadsheet we can use to input these specific investments and see what our total 5-year return would be, including our annual cash on cash? Amazing you asked for that, Craig. So if you go down to this one, which is the Phoenix deal, as an example, you can literally go here. You can say, I want to invest $10. You can say, I want to invest $1,000. You can say, I want to invest $10,000, whatever the number is. It's an automatic calculator. It calculates exactly what the fees are. It shows you the percentage return. It shows you the annual. So, our logic is green is money in your pocket. Red is fees. So you can literally see exactly what the fees are. You can see what the return of capital is. You can see what the capital growth is. You can see what the success fee is. And you can basically see what the net return is. You can see what you invested, and you can see what you get paid in your pocket with the cash on cash and the IRR. So again, I don't know. And by the way, this is cool. I mean, you can say I've got, I don't know, 13,967, and it automatically does it for you. You can also, based on transparency, you can see what it is with fees and without fees. So there's complete transparency in terms of what your net return is. So yeah, Craig, we've tried to make life easy for people, so that you don't have to try and go and figure out how to use a spreadsheet and what IRR is. If you've ever done any of the calculations that people like Dr. Hunt Australia teach and Dr. Dolph DeRus and whatever, I mean, Dr. Hunt Australia has a course. It takes an entire day just to work out what the IRR is. My philosophy is, I don't think you necessarily need to know how to calculate the IRR. Like, I mean, it's good to know what it is at a rough sense, but it's a bit like when I get into my Fortuna, my Toyota Fortuna. I don't really know how the engine works. I just rely on the fact it's taking me from A to B. So as long as I can rely on the fact that the maths has been done right, then I can use the numbers. Like, does that make sense?
Yeah, it makes total sense. Thanks. Do you have anywhere where, I know you've done it per investment, have you got a place where you could put those 4 investments you showed us today into one spreadsheet, and then holistically you're tracking what you're doing or forecasting what you're going to do? Do you have that?
Look, I've got a hell of a lot of spreadsheets. We've got this, which I don't know if you've seen before. I never remember if I'm on the right version, so just give me 2 seconds. Have you guys seen our wealth plan calculator before?
I've
Yeah.
seen that before, yes.
Okay. So, I mean, this is a total like plan where like if you're wanting to work out how much you need in passive income and then what that cash on cash return is, what's your starting capital, etc. Anyway, I'm not going to, I can go through it if people want me to, but this is a total like a way to figure out a plan as to what you need to do to get to your freedom number, your passive income number. What you're asking for is slightly different. You're asking for an IRR calculator. And I do have what you're talking about. I'm a bit of a weird guy. I'll own that.
I know you're not scared of doing spreadsheets. You're very much a hunter's drainer as well. So I'm well aware of that.
Okay, so let's just look here quickly. I'm trying to see which one of my spreadsheets is relevant.
So for me, it's taking those 4 examples you gave us today, putting in $10,000 in each one, and then plotting it into a central spreadsheet that tracks that monthly to see those investments are on track and they're working towards your financial freedom number.
Yep. I know exactly what you're talking about. I'm just wanting to.
I think it helps consolidate why I'm going to go invest in those different portfolios, because ultimately they're leading to my financial freedom number. Doesn't mean it's going to be an exact science. It doesn't mean it's going to work exactly as things change, but it gives one the confidence of why we've invested in such portfolios to get the diversity for one, but then also knowing it's meeting, ultimately we'll reach that financial freedom target as well.
Yeah, so Craig, I mean, I don't necessarily have exactly what you're looking for, but I can show you what I've done, which I think is answering your question. So what I do with scenario planning, and I learned this from Clem Santa, is I do a number of different scenarios and whether I should stay here or invest here or what happens if the rand improves or recovers. And then I basically put that into a 25 years, actually 30 years, with the different options, and then it plots it out in a graph. To be able to visually see what it looks like. So what you're asking for is that you're basically saying the same thing. It would just be the 4 investments. You would just plot the numbers, and then you would have all 4 investments tracking over 30 years in terms of the total process. So I don't have it exactly like you want it, but this calculator or this spreadsheet or whatever, it wouldn't take long because you can see there that there's effectively five. There's 5 different scenarios. So all I would do is I would plot these numbers based on each deal and the timing of each deal, and then it would effectively forward, because again I learned this from Hannes, and I always like to give credit where it's due. If you look back a couple of years and you've got a trend, and then you look forward, you can extrapolate that trend, and then you put it into a graph so you can visually see it. I mean, I literally learned this from him. And I think to some extent, this is what you're asking. I don't have exactly what you're looking for, where you can put in, 4 deals and it does it. But I mean, it wouldn't take long from this spreadsheet to build that.
That's exactly where my thought process is.
Yeah.
And I'll share why. One of the things I'm trying to set up here in the UK is entrepreneurial masterclasses. And, as an entrepreneur, you've got to start making money. Once you're making money, you've got to be investing it, or a portion of it needs to go into investment. And this is where the diversification kicks in for me. And the Wealth Migrate is an ideal platform to introduce to those entrepreneurs to go and invest their money, but you need to be able to literally step by step show them how to track to get to the financial freedom number. So they say, well, I'd rather put the money into a diverse platform like Wealth Migrate than going and putting it into the BMW or the new Mercedes-Benz or the Golf R. So they need to understand why not go and put it into that, but move it into a diverse investment portfolio.
Yep. No, completely. I think you're spot on. And I think
so I'm looking for my partners in the Wealth Hackers to assist to create a process flow that makes that kind of it's a no-brainer when you start showing it to a person. It actually logically just fits into place.
Well, you know what's so interesting with partnership you talk about? So, I mean, I've got all the spreadsheets. I mean, I literally showed you here. I've got 100 spreadsheets. And when Shane and I first did this, to me, it all made sense. I don't know what Shane would say. But then It was actually one of our mastermind members. And it was 3 different spreadsheets. It had IRRs and it had planning and it had a whole bunch of thing. And she literally went and put it all into a Google sheet. And I mean, it's got currency conversions that are linked to the internet and everything. And the thing I like most about it is every single person on the planet has access to a Google sheet. Versus when you send spreadsheets, they don't have the right version, and it doesn't work. Okay, and that was 100% based on community, if that makes sense. So I taught her how to do it. Like, she didn't know how to do it, but she built the system. I didn't know how to do that, and she's now built a tool that Shane and I can share with people for free. I always say to people, it's 90 to 95% accurate. It's not 100% accurate. Nothing in life is 100% accurate.
Correct.
Because no one knows COVID's coming anyway. But the point being is, wouldn't you want a tool that can give you roughly, within a 90% accuracy, and it takes you 5 minutes to do, than a tool that takes you 3 months to learn how to use? There's so many input variables that the chances of you messing up one of them are quite high, and therefore it's bullshit anyway. You know what I mean?
Yeah.
And I just love the fact she built it and this tool's available to people, so.
And that's what I enjoy about the Wealth University and
Yeah.
yourself and Shane. That's what I love about it. It's
Naval,
tools that I have access to. So thank you.
yeah, and again, if we can collectively build more great. Naval, yes, we are recording. Shane asked me just to share this with you. If you're here and you're wanting to get started and you want to do it for free, literally you've got our Wealth University. We've got the replays here of the diversification. We've got the Clem Santa. We've got the eWealth Pack. By the way, this is something Shane and I put together. It's kind of because I kept getting asked by people, what book should I read, whatever. Well, you got my book, you've got all our white papers, you've got our cheat sheets, you've got our recommended reading on all the books from mind, life, goals, real estate, investment, business, leadership, sales. You've got bonus resources. So we actually valued this. I mean, I've been doing personal development for probably 30 odd years. And we valued this, it's worth thousands of dollars, and we literally give it to people for free. So it's there. You've got Creating Lasting Change, which I literally taught. I was taught by Tony Robbins on how to do this. You got the Investor Roadmap. So I mean, this is all here for free. You can go into the community. You can ask questions. You've got the calendar. You've got the other members. Again, you've got leaderboards, etc. So I mean, this for us is what we call our it's our free university, and this is very much living up to our philosophy of making it accessible to everyone. So no one can basically turn around to us and say, "Oh, but this is only for," because our whole thing is we want to help everybody invest like the top 1%. Don't get me wrong. A passion of mine is to share with everyone. The thing I get the most joy out is that actually working personally with people that are part of the mastermind, because it's one thing to talk like this on a Zoom meeting, but it's other thing to actually work with people. But I see actually Shane has said there to Naval, yes, it'll be put into the school university, which I've just shared with everyone. So have I got anything else that I can help anyone with? I always get fascinated with these FAQs. I always turn up and I don't know what we're going to talk about. I do try and come with one theme so I don't look like a goldfish in a bowl with a mouthful of teeth, not knowing what to talk about. But as usual, Shane, an hour's gone by and I can't believe we're done already. So I don't know if there's anything else that I can help with. I would say to people, I'm happy every Friday. If it takes a bit longer than an hour, I don't really care. But yeah, share it with your friends. For me, what I shared today is worth $20 million. And I'm not joking. It's like physically cost me $20 million to learn what I learned today. And not just me, other investors. So, what you just got in the last hour is pretty insane, actually. But I'd love to be sharing it with more people, take advantage, and come and join us. But Shane, anything I'm missing?
Yeah, so just one thing I wanted to add. If you go back, share your screen again to the school Wealth University classroom. If you go to the Investor Roadmap workshop, there's a lot of resources in there. Never mind actually watching the workshop, which is great. But underneath there is a lot of resources, a lot of cheat sheets. The videos that Scott was talking about, cash on cash, is a little bit lower. This is a great resource to answer a lot of questions that might come up while thinking about how to invest in the platform.
Brilliant, Shane. Thanks for reminding me because I didn't remember that. So everything that I've shared today, the wealth plan certificate, the freedom calculator, the different, sheets are here, partners, due diligence. Like this is a 4-hour course, but it's basically everything you need to know about investing on the platform. And then the videos that Shane just mentioned there, what's the difference between yield, cash on cash, and IRR? etc. is here basically. So yeah, actually very good catch, Shane. And it's all there. All you need to do is sign up to the Wealth University. It's free. You can watch the recording. I literally take you through, with Shane, take you through the entire process there. Awesome. Thanks, Archie. So maybe we should finish with my Airbnb poster behind me, live in the moment. It's the weekend. Depending on where you are in the world, it's only 7 o'clock in the morning here. I have to go and try and survive this devastating hurricane, which is a bit of rain, to be honest. There's not even any wind. I don't understand. I thought when Heidi got blown away, or Goldilocks, whoever got blown away, like there was a lot of wind, but there's no wind. Like I don't understand. But anyway, there was supposed to be 70-mile-an-hour bursts of wind, which I did consider was quite high. I mean, that's like 110 kilometers an hour. But there's not even a light breeze outside, literally nothing. Okay, so the weatherman clearly got excited. But yeah, I just want to thank you. We what's quite scary to me is we are now at the end of September, which basically means we're at the end of Q3. We've blinked and 2024 is pretty much behind us. And as you go into this last quarter, it's really important that we get ourselves set up for success, going into 2025. I know you've all heard this 1,000 times, but that Einstein saying of, doing the same thing and expecting different results is insanity. So if you want help, with us, reach out to us. If you want to join our mastermind, come and join us. I'll literally work with you, hold your hand, get you set up, make sure you hit the ground running, going into 2025. You can work with our family office. If you want to, I haven't done this in 5 years, but I'm actually doing a live event in Johannesburg on the 18th and 19th of October. And if that's a success, I'm actually thinking, Archie, of doing one in London before the end of the year. Maybe we'll do it on the weekend outside of the rugby weekend. So yeah, if you would like to join us for a diversification workshop, just let us know. Thanks, Shane, for putting that up. Because I'm interested, I'm very happy to do them live. But I just kind of want to know that people actually want to do it, because I used to do them all live and then COVID happened. And then we did a few events in like 2021 and there were like 3 people in the room. I was like, bugger this. I'm only doing online. I'm not traveling and leaving my son and all of that stuff. But if people think that there's a demand, the feedback I'm getting from the market and from my partners that are in this game, they're all saying that people are going back to 2-day live workshops. So it's definitely something that we're looking at. If you are interested, just put it in the chat box. I mean, pretty much what we did today. Imagine doing that for 2 days, but actually going deep into each country, into each currency, into the 15 different assets, how to find the right partners, how to build a wealth plan, etc., and basically walk away with a tangible plan. Shane, I need you to help me find that 1-page framework that you've got. I know where it is. It's in the challenge first page. But anyway, I'll because I want to show people the framework that they'll get, by the time they finish the workshop. But yeah, Archie, I might or might not. It's actually going to depend quite a lot on whether I can get my partners in England to help me. Craig, maybe you as well. I'm not flying to London and coming and putting on an event and 3 people turn up. So it would depend on whether my partners will be prepared to support me and let people know about it in England. And if they are, then I'd like to do something in November. Might be an excuse to come watch the Springboks as well.
Okay.
So, Bibi, okay, I've got your email there. Bibi, I'll tell you what I'm going to do quickly. I'll just message you directly. Do you want to just WhatsApp me? I need to send you a link from The Real Success. And yeah, if you're interested in Johannesburg, then great, in terms of that process. Okay, everyone. Well, thanks for filling in the poll. I appreciate it. I can see 9 people want to come on the course and 1 person doesn't. 2 in London, 2 in Johannesburg, 2 in Cape Town, 1 online and 3, no, sorry, 1 other and 3 online. Now you can see why I do stuff online. I just stay at home in Knysna and I keep you all happy versus like going to London and keeping 2 people happy and then going to Joburg and keeping 2 people happy. So, I mean, one of the things that I'm so grateful for in our mastermind is we've got literally people from America to England, Spain, Portugal, Germany, Italy. Well, the German gentleman passed away, unfortunately. Australia, New Zealand, South Africa, Zambia, Swaziland. And I always say to people, how the hell would I, do a live workshop? Like, where would I go? You know what I mean? So this online thing is a little bit interesting. Shane's just shared quickly the link. So this is the essence of what people get from the diversification workshop. We will literally, you'll be able to fill in this form. So, what are your top 5 whys? What are your top 5 countries? What are your top 5 currencies? What are your top 15 assets? How do you find the right partners? Your wealth plan over time, and how to use technology. So yeah, if in 2 days you walk away with a plan, I'm not interested in just information. I'm interested in plans. BB, that is my WhatsApp number I gave you. So you can send me that on WhatsApp. Okay. Have a wonderful weekend. Hold thumbs for the Springboks. I look forward to us having a win. If you haven't figured it out, I'm a rugby fanatic. And I've actually decided to stay in America for another week. I've got business here. So next week I'll be doing everything from America as well. And only going home in a week's time. Anyway, I hope you all enjoyed it. Oh, and by the way, if you've got any ideas on questions you want to ask, or I don't know, Shane, maybe in school we need to create a way for people to ask questions, because I'd actually love to create a list, a library of kind of questions people want to go through. And even if we can only deal with one a week, I mean, today I really only dealt with one question, and that's how do you safely invest in property? Literally, I mean, if you think about it. And sometimes, it's better to go deep into one question than to do 20 questions. But I would love to start building a library of questions that people want to know. So yeah, help us. Help you.
Yep. I'm going to create a post right now in the school called the Wealth University Q&A session, 4th of October. If you have any questions, just put it onto that post.
Cool. Well, maybe we don't make it the 4th. I see what you mean for the next one. Yeah, okay, good idea. Perfect. Awesome. Okay, everyone, have a wonderful weekend. Cheers.
Bye.